attire, but frankly, I'm just about to go on a 5-mile run, but I wanted to record this daily financial news first. So first thing we need to talk about is Silicon Valley Bank. We are witnessing a classic bank run. Folks, if you've never heard about Silicon Valley Bank, it is something that is frankly very near and dear to my heart. It is actually a bank that many of the startups I worked with 20, 25 years ago banked with. It is entrenched in the Silicon Valley. Now, this bank run we are witnessing, is it the start of a banking crisis? Well, let's talk about what's going on at Silicon Valley Bank. Let's talk about their customers, their clients, where they fit in the Silicon Valley. And then you can kind of understand, is this the start of a huge banking crisis or not? So first and foremost, Silicon Valley Bank is, I should say, was the 16th largest bank in the United States. Now, of course, they are the lifeblood for startups. They are the lifeblood for venture capitalists. They are not, I want to stress, not what I would call a traditional bank, right? They are not servicing mom and dad. They are not servicing endless clients like Bank of America, like Wells Fargo, so on. Hey, Brian, thank you for the super chat. I appreciate you. So again, this is not a traditional bank, but it is without question a bank run. So what happened? First and foremost, Silicon Valley Bank is not going to be purchased because they were over aggressive. In fact, Silicon Valley Bank is, except for the last 48 hours or maybe the last 3 days, a rather boring bank. They took in client deposits, they bought treasuries, they bought commercial backed securities. This is not about a bank going out on the risk curve, doing stupid things, and then having those bets blow up. This is a bank that bought long duration treasuries before the Fed raised rates 400 basis points. Now, if you don't know, let's remember, as rates go up, values go down. And now what we are witnessing, of course, in the Silicon Valley, if you've been watching the channel, is a lot of companies kind of burning through capital. So what happened is Silicon Valley Bank, I believe it was on Wednesday after the market closed, indicated that they needed to raise something like $1.25 billion. Now, why did they need to raise this money? Because essentially they had to mark to market long duration assets, and they took huge losses. They took losses on treasuries. Now, originally on their balance sheet, they had marked those treasuries as hold to maturity, meaning if they had a 10-year note, they were just going to collect interest, hold to maturity. But because they saw so many withdrawals and the need to raise cash, they were forced to sell them. And when they were forced to sell them, they were forced to recognize a loss. Then suddenly they had to go raise capital, and the rest is history. So first, let's know that they are FDIC insured. Now, this would normally reduce the stress or a need for a bank run, except at Silicon Valley Bank. Silicon Valley Bank is dealing with venture capitalists, with private companies who have tens of millions of dollars, who have receipts and payables and all of these things. They are not going to be made whole or feel comfortable with an FDIC limit of 250 grand. So Peter Thiel, a Bay Area, PayPal mafia guy, has told all of his funds, all of his private companies, get your money out. Once that started, once customers lost confidence, game over. Silicon Valley Bank, as of yesterday, was trying to raise, $2 billion. That failed. Now they will be sold. I expect by Sunday evening there to be a term sheet and someone will buy Silicon Valley Bank. It is an asset. It does unique things. It has an important place in the market. And again, it was the 16th largest bank in the country. But once customers lose confidence, it is game over. This is your classic bank run. Okay. Second, is this the start of a banking crisis? Well, folks, at least to my knowledge, there are no other Silicon Valley bank like banks, meaning institutions where their clients are high net worth. They are companies with tens of millions of dollars. And again, their clients will not be made whole by FDIC, right? These are companies that have to make payroll, that have to pay payables, that have to do all the, they should get their money out of Silicon Valley Bank. You don't want to be the last person. You want to be the first. You want to use the app, you want to do 5 clicks, and your money's out. It is somewhere else. So, again, I am not an expert in the banking industry, but having been in the Silicon Valley area for all of my life, there is not another institution like this. So I think it will be bought. It is clearly a bank run. It is clearly over. I think they will be bought by someone by Sunday evening. So the next, at least a term sheet, right? It actually won't close, but there'll be a term sheet signed. And again, what happened and why this went so fast is folks like Peter Thiel, a venture capitalist, highly respected in the Bay Area, when he told his companies to get your money out, that was the contagion. That was the straw that broke the camel's back. Game was over. So Silicon Valley Bank is in trouble. Now remember, what have you and I been talking about for the last 6 months? The Federal Reserve, in their massive rate hike, is going to blow up the venture world, venture capital. They are going to blow up crypto, and they're going to blow up commercial real estate. Those 3 facts still stand. Those 3 things are still true. Next, what has happened? Oh, let's talk about the jobs market next. Remember the jobs market, very important number today. The expectation was, depending on who you listen to, 208 to 225. You and I guessed a number. I guessed 307. It came in at 311. I am going to call that nailed it. So again, folks, we are pretty good on this channel. We got another thing right. Remember, I am going to be sending out a Nailed It t-shirt because a lot of you guessed. I need to go through about 100 guesses. As of right now, I know there was a gentleman that guessed 312, which is wicked close. But in fairness to everybody that participated, I need to go see if anybody guessed 311. 312 is really close. Shoot, 307 is really close. But we're going to see if anybody actually guessed 310. We're going to mail out a t-shirt. And thank you for playing along. It is always fun. Now, the jobs number coming in at 311. That is not the market moving one. In fact, I don't think Powell cares about job creation. In fact, I think if you ask Powell, he would say, I want everybody to have a job. What does Powell care about? He cares about wages and participation rate. Those are the 2 elements that can cause wage spiral inflation. So what happened with participation rate and wages? Frankly, good news on both. So let's play this out. Yesterday, unemployment claims, the weekly number, got over 200,000 for the first time in 9 weeks. It exceeded expectations and could be the early signs that Powell is winning. Again, I think Powell is smiling. I think the jobs report number that came out today is Jerome Powell once again smiling. He is happy. He can go shove 311,000 jobs in Elizabeth Warren's face as long as wages come down. I shouldn't say come down. Wage growth slows, and it did. Wage growth was expected to go up 0.4% month on month. It went up half that, 0.2% month on month. That is a good thing. And finally, participation rate, something that has been trending down for too long, is clearly on the uptick. So again, the employment report, if you are a rookie and you just look at the 311, you would go, oh my God, 311 above 225, we're in trouble. No, you got to look underneath. Wage growth is settling down. Participation rate is up. Next, the unemployment rate. Remember, the unemployment rate last month ticked down to a 58-year low at 3.4. because the participation rate is up, it is now at 3.6. Thumbs up. Powell is winning. So again, lots of good stuff to read today. What's going on with the 10-year note? The 10-year note, I have personally never seen it fall this much in a 2-hour window. Folks, the 10-year note is down 0.22 last time I checked. That is almost a quarter point. It was just over 4%. What, Monday? Tuesday? It is now, let me make sure I get it right, at 3.8% and trending lower. Folks, again, what did I tell you earlier in the week? Powell wants to scare people. Powell wants to make people think 6%, 6.5. Powell wants people to think 50 basis points. It is not coming. This is all theater. This is all talk track. This is all not coming. I am standing my call that we will get a quarter point rate increase. I think it's the 22nd. It might be the 23rd, 2 weeks from today. All of that can change on Tuesday with the CPI report. But, it's Friday. It's the weekend. Let's celebrate some good news as we move forward. And again, I expect mortgage rates to fall once again. The 10-year is down 0.22. Where does mortgage rates go? They were just at 7%. Could they be at 6.75? I don't know. I'm going to reach out to Matt, the mortgage guy, and other lenders to see what is going on. So what else do we got today? Lots of stuff. We had some earnings. Earnings are starting to suck. That is my technical financial term, suck. Oracle missed revenue, hit bottom line, but they had a bad forecast. DocuSign beat top, beat bottom, but said the demand trend is falling. Allbirds missed top, missed bottom. Terrible Q4, terrible execution. Holiday results were terrible. And Gap, missed top line, missed bottom line, big loss, declining sales, executive shakeup. Not good at Gap. What else do we got? Jeremy Siegel, a 50 basis point move would be wrong. As I've told you for several days now, it is theater. It is not coming. I don't think the Fed really wants to do 50 basis points because it would admit a mistake. They'd basically be saying our January decision or our February 1st decision was wrong. I also don't think they want to seem chaotic, right? It's been a smooth step down as we've been talking about for 6 months, 75, 50, a quarter. I also know that the Fed knows that there's lag effect and they're starting to see cracks in the system. 50 basis points, in my opinion, not coming unless CPI headline is like 6.5 or 6.6, meaning it went up. The last reading was 6.4. GM, General Motors, is offering a buyout. They are offering a buyout to the majority of U.S. workers. They are offering 1 month for every year of service up to 12 months. So if you worked at General Motors and you've been there 12 years, they are willing to pay your full year salary and give you health insurance. I wonder how many people would sign up for that. Actually, you know what? Let's get some audience participation. Remember, folks, if you want this channel to grow, one of the things we need to do is like, subscribe, and comment. So here's your chance. We'll do some audience participation. If your employer came to you today and said, we will pay you a year's salary to not show up Monday, would you leave or would you stay? Leave your comments below. I would love to hear from you. Let's see what happens. Last thing we should talk about is Silvergate. Not to be concerned with Silicon Valley Bank. Silvergate is a crypto lender. They are suffering and shutting down as expected. Again, folks, the Fed in their rate rises is coming after crypto, the venture world, and commercial real estate. There is still a lot of pain coming in the commercial market. I don't know if you guys saw this, but Jonathan Twomley was on the channel yesterday. We highlighted an event that I and Olivia will be at because we want to take advantage of the pain in commercial markets. If you've been on this channel for a couple of years, you know that I've been telling you there is pain. There's blood in the streets coming to the commercial market. There are bigger opportunities than we have ever done. I need to go learn. I need to get better. I will be at that event. And Jonathan, He didn't have to do this, but he gave Olivia and I a 50% discount on prices. So he offered you, at least for the next week, the same discount. I don't take commissions. I don't take referral fees, any of that stuff. What I got, you got. So I spent whatever it was, $400 or $500 for the VIP tickets. I will see some of you probably in Vegas. That is in late April, I believe. So again, there was a link in yesterday's video. The discount is ORAAT 50 if you want to go to that. And then finally, a lot of you, or I had an idea yesterday about a buy box deep dive. We are going to do that. I'm going to find which Sunday. I think right now it'll be 3 Sundays from now. It will be charged to keep out all the riffraff, but we are going to go deep. We're going to build stuff together. We're going to answer your questions. We're going to look at the spreadsheet. It's going to be very focused on that. It'll be on Zoom. I ideally will have some of you share what you are building so I can critique, we can influence, we can help. At the end of the day, that will happen. I probably will have that set up over the next 48 hours. All right, folks, take care of yourself. Have a wonderful day. I'm going to go for a run. Bye-bye.